Hello everyone, welcome to our channel. So from today 3rd August, the way your stock's closing price gets decided is changing completely. And if you trade Nifty or Bank Nifty options or do intraday, this directly affects your square of timing. SEBI has quietly introduced something called the closing auction session, which is called as CAS. Most channels are just reading you the circular. I'm going to show how exactly what changes minute by minute, why SEBI did this, and honestly answer the question everyone is asking. Is this good for retail traders like us, or do it favor the big players? Stay till the end because there is one number you need to write down for your trading routine. So now why closing price even matters. Before we get into what changing, quick recap on why closing price is such a big deal. So if you are aware of that, this is our old system. So why closing price is such a big deal? Your stock's closing price isn't just a number of the day's chart. So this, let's assume if I'm taking some stock, random stock, let me take HDFC. So what is your closing price today as per this chart? The closing price on the last candle, when you put your cursor here, you see on the upper side here, whatever the closing price comes, that will be your closing price. 750.05 is the closing price. It is not just a number for days chart. It decides your MTM, mark to market, for overnight positions, and this can rebalance the index. The stock's closing prices can rebalance the index like Nifty, Sensex, Bank Nifty based on the weightage of the stocks. And also it is important for F&O contract settlements for many derivative expiries, and it also important for mutual funds. It also important for mutual funds NAV, which is net asset value, for the calculation of for that given day. So whoever influences the closing price has real financial power. Whoever influences the closing price of the weighted stocks that can rebalance the indexes, or else any stock for that case, whoever influence the closing price has the real financial power. That exactly the problem SEBI is going to solve. So now this is our whole system, how closing price was calculated till now. So I will just give an analogy of how this closing price is getting calculated. So let me take you to this screen. So let's assume this is you. You have booked an Ola or Uber cab. You have booked an Ola or Uber cab, and you wanted to go from, suppose you are at destination A, you wanted to go from destination A to destination C by using either Ola or Uber. You wanted to go from destination A to destination C. Let's assume Ola or Uber fare was not based on the final meter reading. So it is not based on this final meter reading whatever you see in the Ola Uber cab, but on the average fare reading over last 30 minutes of the ride. If the fare is calculated based on the average fare reading over last 30 minutes of the ride, suppose the travel time which takes from A to C for you to travel by using Ola or Uber, it takes, let's assume, 2 hours of your travel time. But in general, how the fare is calculated, from the minute you step into the car and the minute you step down from the car, whatever is the duration, based on the duration the fare will get calculated. Sometimes based on, right now when you book some apps, it will show the fare upfront, how much fare it is going to charge. That is based on the ride duration and the kilometers it is going to show. This is the traditional thing whatever is happening. But let's assume your Ola Uber is not going to calculate the first 1.5 hours for this first 1 hour 30 minutes for this ride, and they are only going to calculate the average reading for last 30 minutes. Based on this average reading, they are going to charge the money for your ride. Now if someone wanted to manipulate the reading or the manipulate the fare, what they have to do? They have to slow down. After 1 hour 30 minutes, instead of going in 80 speed, 80 kilometers per hour kmph, if the driver goes in 40 kmph, what will happen? In 40 kmph, what will happen? Instead of 2 hours, the ride will go for 2.5 hours. The ride will go for 2.5 hours, and here driver has the upper hand to manipulate that fare. Because the steering is in the driver hand, he can manipulate that fare, and the average shifts in his favor. Even though the actual final value should be something else, the bill will come something else. That is basically what was happening with stocks. This is what happening with stocks until now. The closing price was calculated based on the VWAP, volume weighted average price of trades in last 30 minutes of the hour. That is from 3 p.m. to 3:30 p.m. Whatever trades that happen during this time, either it can be limit orders, market orders, or anything. Either it can be CNC orders, any orders. Either it can be mutual funds execution, whatever orders that execute between 3 to 3:30 p.m. The average volume weighted average price is going to be calculated for this last 30 minutes of the closing session. Based on that, the closing price of any stocks or index is going to be calculated and decided. The problem is in those last 30 minutes. So why this is a problem? If in this last 30 minutes, suppose there is a player A and there is a player B. Player A has 100 crores in his pocket and player B has 1 crore in his pocket. So these both are entering into this last 30 minutes to trade. Now who has the upper hand to manipulate the price, the closing price? If this big player pushes big volume through one direction with the 100 crores capital deployed either towards buying side or selling side aggressively, they can pull that VWAP average towards a price that benefits their positions. Whatever VWAP, here I have applied the VWAP indicator. This is volume weighted average price. He can pull this volume weighted average price towards his benefit with the 100 crores capital deployed either buying side or selling side, whichever side his positions are. They can pull this VWAP average towards a price that benefits their positions. If he has short positions, he can sell with this 100 crores and the price will go in his favor. If he has long position, he can buy with 100 crores in HDFC, as this is a high weighted stock in Nifty and Bank Nifty. So obviously the index will move upside if he buys with 100 crores in last 30 minutes, and if he buys underlying options with some 10 crores. If we deploy this 100 crores in HDFC, Nifty will jump, Bank Nifty will jump, and his option prices will also jump. So he can turn that price in his favor. This is something called banging the close. That is called globally, which is called as banging the close. This does not need illegal intent even, just deep pockets and the right timing. If somebody has good amount of money, this is the right time where they can manipulate the market, where they can manipulate the price of a high weighted stock in any of the index, and they can move their price accordingly in their direction. This is exactly the loophole which SEBI is going to solve. So this is called as banging the close, and deep pockets could push massive volume in final minutes to manipulate that average within the 3 p.m. to 3:30 p.m. This is the exact problem which SEBI is going to solve. So SEBI now bought this new rule, which is CAS, which we just discussed, closing auction session, okay, which replaces this 30-minute whatever manipulation that was happening recently within that last 30 minutes. So that SEBI is going to put a check mark for that, and they bought the CAS rule, which is closing auction session. So now here is the new system, and I want you to just watch carefully, listen carefully. Think of a property auction or an antique auction. Okay, think of a property auction or an antique auction. Let me go here. Let me delete this. So here is a property. Let's assume this is a property. I'm not good at drawing, but let's assume this is a property, or let's assume this is some antique piece which has some gold diamonds on this spoon. Let's assume this is an antique piece and this is a property. P and A, antique and property. So in a normal auction, what is going to happen? There is an open bidding period where anyone can shout out a price. So there are people sitting here. This is an open bidding. So what people will do? So he will tell, I will buy this house at 1 lakh rupees. This guy will tell, I will buy this house at 2 lakhs rupees. This guy will tell, I will buy the house at 1.5 lakh rupees. As the auction nears the end of the time, the auctioneer, what he will do, suppose the auction time is 1 hour. So now people are doing auctions. Somebody is telling I buy for 1 lakh. Somebody is telling I buy for 2 lakh. Somebody is telling I buy for 1.5 lakh. And 45 minutes is done now. Out of 1 hour, 45 minutes is done. Within this 45 minutes, some random people, even though they don't have an opinion to buy the house also, they will just auction because there is a time. Okay, in 1 hour, n number of people can auction, n number of times, n number of bids they can propose. But as auctions nears the end of the time, what auctioneer will do? He will tighten the rules. What he will say? No more casual bids, only serious final offers. Then at that moment, nobody knows exactly in advance when he is going to hit that hammer. And whatever the last matched bid was becoming the final price, the official sale price. People are just keep on auctioning. Somebody is telling 1 lakh, somebody is telling 2 lakh, somebody is telling 3 lakhs. Suddenly what happens? The auctioneer will come, the auctioneer will hit this hammer on the table in that last final moment. You never know when he is going to hit that hammer on the table. Whenever he hit that hammer on the table, whatever price, whoever is the person who have called out or who have auctioned for some particular price that is going to become the final, and that is the official sales price. That randomness is exactly when the hammer falls intentionally. It stops people from timing a manipulative last second bid. So when you don't know when this hammer, the auction is going to hit that hammer, so how can you manipulate the price? You will not be able to manipulate the price, because at the end, when serious people are bidding, and you never know when auctioneer is going to hit this hammer, in any second he can hit that hammer. So you will not just randomly call for the auction. So if you are really intended to buy that property, if you have real money to buy that property, if you have real source to buy that property, then only you will bid, or else you are not going to bid. So that is what SEBI has built, almost exactly this process for our stock market, and it is called the closing auction sale, or CAS. Instead of closing price coming from an average trades which happened in the last 30 minutes, it will now come from a single auction, a single matched price. So we are going to discuss those timings. What is that bidding we have to do, with what are those timings, all that we'll be discussing as we progress. So now you have understood the concept of CAS. Instead of closing price coming from this average trades which are happening in that last 30 minutes, now the closing price will be based on the single auction, the single matched price decided in a tightly controlled last 30 minutes. Tightly controlled last 30 minutes, SEBI is going to stop that auction, and in whichever moment it stopped that auction, whichever second, and within that second, whatever price that is being placed, either a limit order or market order, that is the final price, and that is the closing price for that stock or index on that given day. So now let's walk through this minute by minute. I'm going to walk through this minute by minute. I will map each stage back to our auction house analogy, so it sits in your mind. Let me go back here onto the PPT. So now 3 p.m. through 3 p.m. to 3:15 p.m. regular trading continues as normal. The VWAP of this window becomes the starting reference price for the auction. Whatever trading that happens within this 15 minutes, this 15 minutes will be treated as the volume weighted average price of this window. It will set the starting price for the auction window. It will set as the starting price for the auction. This is like a auctioneer taking a final round of open bids to set the opening bid price for the auction. So now 3:15 to 3:20 p.m. market transitions to CAS. 3:15 to 3:20 p.m. market transitions to CAS. No orders can be placed, modified or cancelled. The auctioneer says bidding is passed. Everyone takes their seats. No shouting allowed. So I'm just connecting back to our analogy which we have just discussed. 3:20 to 3:25 p.m. market orders and limit orders can be placed, modified or cancelled between this 3:20 to 3:25 p.m. This is the opening bidding around. You can raise your hand, change your bid or withdraw your bid. Now 3:25 to 3:30 p.m. between 3:25 to 3:28, 3:29, 3:30 p.m. only limit orders allowed. Market orders can no longer be modified or cancelled. Only limit orders will be allowed. Now it's serious final bids only, no casual back and forth. So if you have placed the order, it means that you have placed the order. You will not be able to cancel or you will not be able to modify between this time zone. Now from between 3:28 to 3:30 p.m. order entry closes at random. No order entry will happen between this time period 3:28 to 3:30 p.m. No entries will happen. So system decided movement. This is where system is going to decide. So here is where anti-gaming system closes entry at a random second. Nobody can time the exact end. This is the hammer, the auctioneer hitting the hammer on the table. Nobody knows the exact second, which is the whole point. It stops last second gaming. 3:30 to 3:35 p.m. buy and sell orders matched at one single price by the exchange. Buy and sell orders matched at one single price by the exchange. This becomes the official closing price. The final sale price is announced, one number for everyone. So here is where 3:28 to 3:30 p.m. is the crucial time where the system at the SEBI end is going to run and it is going to pick that final auction price, single price, whichever the system is going to pick the final auction price, whatever auctions that happened during this time zone till 3:28 p.m. That is the final auction price system is going to pick, and that will be the final closing price for that stock, for that index, anything in the market. Okay, so a few important add-on rules to know. So orders of CAS eligible stocks can only be placed within a plus or minus 3%. Okay, you cannot randomly place your orders. Suppose if HDFC is at 780 rupees, above plus or plus 3%, you can keep your order. Below minus 3%, you can keep your order. You cannot keep your orders above 3% or below 3%. Maximum is the 3% range. Around that start price only you have to place your limit orders or market orders or anything. So wild and manipulative bids far from reality simply won't be accepted. So with this rule, what is happening here? Wild bids, okay, people who are really not interested in buying or who are trying to manipulate the market, placing a bid above 5%, above 10%, those things cannot happen now. Okay, so stop losses, iceberg and disclosed quantity orders are not allowed during CAS. Only plain market or limit orders, only limit orders or market orders will be allowed. There will be no iceberg orders, no stop loss orders. The quantity orders with undisclosed quantity will not be allowed during this time frame. Okay, only limit orders or market orders. If you had a pending limit order from the regular session, that's within that plus or minus 3%. If you have kept a limit order, and your limit order is there between plus or minus 3% on any stock, index, option, anywhere. Okay, what will happen to that? That order will automatically carry forward into next CAS. You don't need to replace it. That will automatically carry forward into next session. You don't need to replace this order. It will automatically carry forward. No need to replace that. If for some reason the exchange can't find a matching price, the starting price itself becomes the closing price. So there is always a fallback, never a gap. Suppose if exchange, okay, can't find the matching price, if exchange is not finding a matching price based on its system, so what will happen? The starting reference price itself becomes the closing price. The first, whatever the normal bid that started with between this 315th, whatever the starting reference price that we take from this time zone, that price itself will become the closing price of that stock or index. One more detail specific to which stocks this applies to for now. CAS initially applies only for stocks in the cash segment that have derivative contracts available. It means this is going to be applied only for F&O stocks which has future and options. Any stock that is tradable in cash segment and is available in futures and options, all these rules are applicable only for those stocks, because with the help of those stocks only big players can manipulate the market. People who have deep pockets, they can manipulate the closing price. That is why this rule has been introduced. So now let's see. So we have discussed what order types allowed: limit orders, market orders, no stop loss orders, no iceberg orders, no disclosed quantity orders. Orders must be within 3% of the starting reference price. And here I've given a tip: unexpected limit orders from regular session auto carry forward if they are within 3% band. If they are within this band, they are going to auto carry forward. So now, okay, so this is the part I told you to write down. In the starting, I said I am going to tell you few timing sites. So this is that slide. So because the market timeline has shifted, your intraday MIS auto square of timings are also changing too. And this is practical bit that affects your trading day starting today itself. Okay, so at least from tomorrow, if you are watching this video, at least from tomorrow you know what is CAS and how it is impacting all those things. So CAS eligible equity F&O stocks. So the 3-5 p.m. is the time where you have to square off your positions. So this is the time where you have to square off your positions if you are trading in intraday. So in general, before we used to square off at 3:20 p.m. We used to square off at 3:20 p.m. Now this square off will happen and we should square off our intraday positions in this CAS eligible stocks, which are F&O stocks, because some people will sell buy within intraday this F&O stocks in cash market. I'm not talking about futures and options. Futures and options you can carry forward till the expiry. But if you are trading in intraday, if you are selling in cash, if you are buying in cash only for intraday, then you should be closing those positions by 3-5 p.m. If you are not closing by 3-5 p.m., then broker is going to auto square off these positions. And non-CAS equity stocks, which are not part of F&O, there is no change in that. At 3:20 p.m. you should be squaring off these positions if you are trading in intraday, buying or selling these stocks in cash within intraday. And F&O, future and options, 3:25 p.m. may extend to 3:30 p.m. based on the volume. Okay, so still this is not decided extending, but there is a note from SEBI that they might extend this to 3:30 p.m. instead of 3:25 p.m. 3:25 p.m. is the regular, and we might get a change to 3:30 p.m. If you are someone who holds intraday positions on F&O stocks right up to the old system 3:20 p.m. square off, that window is now gone. Your broker will auto square off at 3:05 p.m. for those who are trading Bank Nifty and Nifty weekly options like we usually discuss on our channel, your relevant square of timing is 3:25 p.m. This is still the old time. It might extend to 3:30 p.m. Also, if you use GTT orders, or SIP orders or scheduled orders, these may now execute according to the new revised schedule. So don't assume your old GTT triggers will behave exactly like same before. So this will be based on the new set of rules. So now the question everyone actually came here for: should you be worried, or is this an advantage for you? Let's break this down. Who is going to win here? Why this is genuinely good for retail traders? The old 30 minutes VWAP window. Now the question everyone actually came here for: should you be worried, or is this an advantage for you? Let's break this down honestly, both sides, why this is genuinely good for retail traders. The old 30-minute VWAP window was the single easiest spot for large players to influence the closing price with big volume. If they dump 100 crores in any good weighted stock, they can move the market in their direction as per the positions whatever they're having in their account. They can move this high weighted stock in their direction to manipulate the positions with big volume, something a retail trader cannot do with limited capital. A single price auction with a random cutoff removes a lot of this edge. That is what CAS is all about. A single price auction with a random cutoff removes a lot of this edge for the big players. The plus or minus 3% band, because you cannot place the limit orders or market orders during the time frame of bidding above 3% or below 3%. This prevents wild manipulative final minutes bids. A cleaner, more reliable official closing price means your overnight MTM and any strategy based on closing price levels like your supply demand zones marking becomes more trustworthy, but not less. Why big institutional players aren't necessarily losing out there? Index funds, ETFs, and large institutions that rebalance based on closing price actually. Index funds, whatever index funds you are seeing, whatever ETFs you are seeing, okay, and the large institutions that rebalance, they are going to rebalance their portfolio based on the closing price actually. Prefer more standardized transparency price discovery. So it reduces their execution risk to not just retailers. If somebody is moving some price, some stock, that will also affect big players' portfolio. If some other big player is moving, other big players' portfolio might get affected. Now with this transparency of the closing price, it gives peace to them as well. So the execution risk and the transparency, everything will be now mitigated. So this isn't really retail versus institutions. This rule is not just between the retailer and the institution player. It's transparency versus manipulations. This rule majorly SEBI brought between this transparency versus manipulation to avoid manipulation in the market and increase more transparency in the market for both sides. Both can trade fairly and benefit fairly. So that is where this rule has been introduced. The one place where you need to actively adjust, not worry, your MIS auto square of time. This isn't a disadvantage. Earlier we used to close at 3:20. Now you have to close your intraday MIS positions at 3:05 p.m. It's just an operational shift you need in your routine. My honest take for this channel audience, this is a structural improvement to price discovery similar to what more mature markets like the US already use for closing prices. The worry angle here is overblown. The real auction item is updating your intraday square of timing, not fearing the mechanism itself. But one more change is coming very soon. So you can mark your calendar this date, September 7th. One more change is going to come. So SEBI is also revising the pre-open auction session effective from September 7th. 9 to 9 p.m. 9 to 9:05 p.m. 9 to 9:05 p.m. Sorry, a.m. 9 to 9:05 a.m. Market and limit orders can be placed 9:05 to 9:10 p.m. 9:05 to 9:10 p.m. Only limit orders can be placed. Market orders cannot be modified or cancelled. 9:08 to 9:10 p.m. Random system cutoff. System is going to randomly cut off the orders. And 9:10 to 9:12 p.m. Sorry, 9:10 to 9:12 a.m. Whatever orders that match opening price will be determined. Between this window, whatever auction happens between buyer and seller and whichever price, suppose SEBI system is picking within this time frame. For HDFC, 780 is the auction price of buying. If there is no selling price of 780, if there is no selling price of 780, what will happen? It is going to pick the last day's closing price itself. Last day's closing price itself will be the opening price. That's it. There is no one can manipulate now. So now 9:12 to 9:15 p.m. market transitions to regular trading. By earlier we used to get to know by 9:07, 9:08 a.m. whatever is the opening price of index, stocks or anything. Now that we will get to know by 9:12 p.m. and 9:12 to 9:15 p.m. market transitions to regular trading. You can put limit orders, market orders, whatever you wanted to keep, you can put those orders. Same principle like CAS, whatever we have discussed, the closing timing, just applied to the market open instead of close. I will also do a dedicated short video if there are no further updates on this pre-open changes. So we have time. September 7th, still we have 1 month plus time. So by that time, if I see any other changes in this pre-open sessions, I will make a dedicated short video on this as well. So now this is the ultimate cheat sheet. From today, this rule is applied. So to summarize in one line, from 3rd August, your stock closing prices comes from a real auction, not an average. And your MIS auto square of timings are at 3:05 p.m. And the other rule is orders must be within plus or minus 3% band. No stop loss iceberg orders will be entertained in the last window timings, whatever we discussed. So if this helped clear your confusion, hit a like and drop a comment telling me, do you trade any of the CAS-eligible F&O stocks in intraday? I want to know how many of you do this actually and for how many it is going to impact day to day. Also, for daily alerts and changes like this before they hit your trading day, join our free WhatsApp community. I will provide link in the description. See you in the next video. Thank you everyone.